the West doesn't look at holding gold and silver quite the way the rest of the world does. If you look at a comment by the head of the Polish National Bank, his name is Adam Glapinski. He says, holding gold was a matter of financial security and stability. Gold will retain its value even when someone cuts off the power to the global financial system, destroying traditional assets based on electric accounting records. So this is the head of the National Bank of Poland saying this. And, you know, when you, and they continue to buy, they've continued to buy, they repatriated their gold from the New York Fed in 2017, 2018. So these countries see what's happening. They understand that the reason that they're not yelling and screaming about the rehypothecated COMEX and the LBMA is that it has allowed them to reposition, that has allowed them to de-dollarize, using the suppression of the Western markets against us. Fine, you want to suppress the price? Fine, we'll stand for delivery. Thank you very much. And we're seeing it in every single way. It's not just the COMEX and the LBMA, which at some point will lose all credibility. We're seeing things drained out of the Shanghai Gold Exchange. We're seeing things drained out of the ETFs. And we just saw BlackRock take almost, I don't remember, it was a copious amount of gold out of PSLV just the other day, almost 8 million ounces they took out, of silver rather, from PSLV. You know, you look at the Chinese leaving the LBMA, I mean, maybe that's just step number one. But I think when you see a system that is rehypothecated to the point where, if you look at the registered category in silver right now, it's 1,700% rehypothecated, 1,700%. And when you see the Shanghai Metals Exchange push the price of gold up almost $100 or silver almost $2 above the Western benchmark, that is the beginning of the end. If you don't see that, you're not paying close enough attention. It's called arbitrage. Let's lift the price up little by little, high enough so that we siphon off all the metal that's not nailed down. This stuff's never coming back. This is a one-way ticket. So yeah, it will end when there are no more deliveries to be made at these make-believe fractional prices. And when that happens, you'll see, I believe, the East take over in terms of setting the price globally. Yeah, I mean, just about everything is up in price. In fact, I think if you look at the difference in the price of or the amount of money that it takes to buy a home versus today versus 2020, the numbers are up considerably. You had to have a $60,000 a year salary in order to buy a home in 2020, and now it's up over 115,000. You know, you're talking about everything going up, including the cost of money. And, you know, when you talk about inflation, that the numbers that are being given to us exclude things like food and energy and housing. So the cost of a Big Mac is up commensurate with the amount of money creation and the level of inflation. Yet, in fact, it's up much more when you compare it to the statistics that tell us that inflation is cooled down a bit and is running at, you know, 3%, when we know that that's not true. It's much, much higher. And you know, when we look at silver, silver has been held back for so long, Mario. And you have, with the new BRICS 6, you have Saudi Arabia, Iran, and the United Arab Emirates being massive oil producers. You throw that in with Russia, you have the majority of all the OPEC oil. Of course, we said Argentina, a major agricultural producer, also controls the Straits of Magellan and has the largest natural gas deposit in all of South America. You have Egypt, and look, they control, as you mentioned, the Suez Canal, a massive major shipping route. And then Ethiopia, the home to the fastest growing economy in Africa. And, you know, with this initial expansion, you're talking, you know, almost 50% of the world's population. And that doesn't even include the Belt Road Initiative, which is up to 75%. You have 25% of all the world's exported goods are represented in these countries. You have a lot of the rare earth metals, manganese, graphite, nickel, all of these, 75% of the world's manganese, 50% of the world's graphite, 30% of the world's nickel, 10% of the global copper. You have 23 countries that have formally submitted their application to join the BRICS, Mario, and another 22 have expressed interest. You have a massive influence or control over OPEC, and these 11 countries will also, more or less rule OPEC in the distribution of oil. The majority of the world's commodities are now under the BRICS sphere of influence, including most of the rare earth metals found in the Eurasian continent. And then you have China being the world's factory to put everything together. And I think, you will see these countries trading in local currencies, as we've seen Brazil and China and Russia and India and Russia and China and on and on and on and on. But there will come a point where I believe that they will issue a common trading currency at some point. We're not there yet, but they will. You have the president of Belarus saying we need to merge the SCO and the Eurasian Economic Union. That's the Shanghai Cooperation Organization, which Iran has already joined, and Saudi Arabia has applied. It's the largest regional financial and military organization on the planet, along with the Eurasian Economic Union. These are all these ex-Soviet countries that end in stan. These are all going to join together. All of these countries are going to join with the BRICS and the Belt Road. You're talking 90% of human population when you put all these countries together, and it's little by little by little by little, and then all at once. The infrastructure is being put in place, and in order for them to issue a common backed currency, you have to have a large enough sphere of influence. Well, you got 11, and now 27 have formally applied, 22 have expressed interest. There are a lot of debts that need to settle in dollars, but at what point does the rest of the world say we've had enough? I mean, we're inflating away our currency. No question about it. It's being inflated away. And you look at the bond market, it's going upside, the worst performing bond market over the last 3 years in the history of the bond market. At what point does the rest of the world say, we don't want your dollars any longer? Why would you want to sell oil to a country that's going green, that's its currency is being inflated away? So the metrics by which they measure inflation are lies. And when you look at where we are, we have $33 trillion debt, but $130 trillion in unfunded liability. And what happens as rates go higher and as the dollar, which is inordinately strong right now, unjustifiably strong, starts to lose ground, inflation only starts to go higher. This is a deal, like I said, little by little by little by little by little, and bang, all at once. And to the dollar bull's point, they're right. And that's what the little by little by little by little by little is. All of these deals, at some point, when you see all of these deals that are settling outside the dollar, it has to affect the reserve status of the dollar. And so until it happens, the dollar is still the king. But I will tell you that I believe that is a trend that is firmly in the sights of the BRICS nations and the majority of these countries around the world that are pushing back against the West, that ultimately this is where they want to go. Until then, the dollar is still king. But it is a situation that I think is moving in the wrong direction. So yes, they're right until they're not. And when they're not, it will be all at once.